Ladies and gentlemen, good day and welcome to Metro Brands Ltd Q2FY25 earnings conference call hosted by JM Financial. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing the star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Gaurav Jagani from JM Financial. Thank you and over to you, sir.
Hi everyone. On behalf of JM Financial, it is my pleasure to welcome you all to Metro Brands Q2FY25 earnings conference call. From the management we have with us today, Mr. Rafiq Malik, Chairman, Mrs. Farah Malik Bhanji, Managing Director, Mr. Nissan Joseph, Chief Executive Officer, Mr. Kaushal Parekh, Chief Financial Officer, Mr. Naveen Gupta, Chief Business Officer, Mr. Mohit Dhanjal, Chief Operating Officer, and Ms. Aisha Rafiq Malik, President, Sports Division, E-Commerce and CRM. Thank you, and I will now hand over to the management for their comments and opening remarks.
Thank you, Gaurav. Good afternoon. Thank you for joining and welcome to our Q2 FY25 earnings call. As we shared in our filings, on a standalone basis, we were up 5.1% with EBITDA and PAT remaining constant to last year. We are pleased to see business improve over the previous quarter, and there were some wins in our portfolio of banners last quarter that I do want to call out. Sales of Crocs grew well through what is their most important quarter, which is the monsoon period. We're also pleased to see momentum build in our walkway segment, and while we cleaned up almost all of the Fila inventory, our overall margins still came within our guidance. Our e-com business continues to run north of 10% of our total sales, and our in-house brands continue to represent over 70% of the total business in our MBOs. The sales of products over rupees 3,000 represented 53% of our sales as compared to 50% for fiscal year 24, showing the continued demand for premium products. We opened 23 new stores offset by 3 closures, and for the first half we have opened 40 new stores offset by 5 closures. We're confident that we are on track to open over 100 stores in this fiscal year. Last but not least, on our Q2 performance, Metro Brands continues to show deep operational rigor and financial discipline as reflected in our stable PAT % for the quarter. Furthermore, with the stabilization of BIS-related supply chain disruption in our core brands, we have seen moderate reduction in net working capital days. In the quarter, we also announced the signing of a new agreement with New Era, a leader in crafting high-quality headwear and accessories with over 500 licenses globally in its portfolio. We anticipate opening our first New Era kiosk in the next few weeks. We also just wrapped up an exciting launch of the first Foot Locker store in India at Select City Walk in Delhi. We're pleased with the support that we received from all the international brands in curating an elevated assortment in the store. We look to open the next few stores in the coming quarters. On the BIS front, we've been working on aligning with the regulations and changing inspection schedules. I must point out that we've been able to mitigate the risk to our core businesses of Metro Shoes, Mochi and Walkway by moving sourcing to India or have forward bought inventory to such time as we can substitute it with BIS-approved India production. We, however, are still facing challenges in the sports and athleisure segments, which is why we consciously slowed the growth of Fila standalone stores that do require a much wider assortment. Though we are opening more stores for Foot Locker in the next 6 to 8 months, we are moving cautiously till we have a more concrete view of the supply chain with the BIS influence. We have, however, launched the first of our Fila footwear collections into select Metro and Mochi doors and apparel into Foot Locker and are pleased with the response on the products. Looking to the current quarter, October has some shifts in dates of some key festivals, and we're seeing the sales results come in line with expectations. Furthermore, we have a strong lineup of wedding dates in November and December and anticipate sales to come through at that time as well. So in closing, it appears that most of the normalization of the COVID event are behind us. The consumer continues to respond to the relevant categories and price points, and we're confident that the trajectory of growth we have seen from Q1 to Q2 will continue. With that, I'd like to turn it over for the Q&A session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vedisa Seth from Ambit Capital. Please go ahead.
Hi, thank you for the opportunity. I hope I'm audible.
Yes, go ahead.
Good. Yes. So my first question was on growth. How are you looking at growth in F25 versus the previous guidance of 12 to 15%, and especially in the context of urban growth being under stress, which is also something that large FMCG companies highlighted?
Yeah, so I still think we're going to go with our guidance that we provided earlier in the previous quarterly call of about 12 to 15%. Obviously, when you have a slightly muted first quarter and a second quarter that didn't meet that, it's not going to be the easiest thing in the world. But we have all indications, Vidisha, that the business is there, and there's no reason we shouldn't come at that guidance range.
Nissan, any particular indications that you'd like to elaborate?
Sure. I really want to, and I use Crocs as an example for that, right? So this is the season for Crocs, and this is the biggest season for Crocs was Q2, and we saw that the Crocs sales were very much in line with expectations. In fact, I must say it was even better than that. We were quite pleased with it, showing that the consumer is not fatigued necessarily. It's just as we've come out of the COVID bump, the recovery line has been it's not been a straight line, it's been more lumpy. And that's what we're seeing, but we also feel that we're able to predict business much better, and that means that we are through that normalization, lumps that we've gone through. So all indications are that we should be selling our products well, because there's stuff that should have sold well over the last 2 quarters, especially last quarter, has done well. Don't forget though, Q2 is typically our lowest and probably least exciting quarter in the year. It's occupied by hot season that people don't like to shop. It's occupied by end of season sales, which is not our core business, as you know. So there are some things that make it uninteresting and unexciting. But despite that, inside that, we have seen some exciting shoots that give us the confidence to say we think business is going to be back on track.
Got it. Second was on Foot Locker, with the first store now being open in the north. Any number that you'd like to call out in terms of store addition in F25 and 26?
Yeah, I think in the immediate future, we want to get them up to about 3 to 4 stores, just so we can get a read. As you know, when we start opening stores, we try to get into different markets to get a sense for where do we see the upside. And once we get that model down, then we're able to accelerate it. Having said that, though, we are concerned about the BIS affecting especially the athleisure segment in India, sports and athleisure, because the amount of imports, while all the brands produce a lot of products in India, the vast majority of the products that go to the premium consumer, unfortunately, even today, are being imported. Until that sorts itself out, and every brand is going to figure out a strategy around it and how to come in line with the regulations. Until that happens, we just want to not grow Foot Locker extensively, though we're confident it'll all work out and Foot Locker will continue to have significant legs in India.
Got it. And my last questions were on Fila. If sales of Fila inventory were to be excluded in 2Q, how would the gross margin performance look like? And what would be the quantum of inventory that you're still sitting on in terms of cost, and any impact on margins that you sense for 3Q? That's also my question.
So broadly, the impact would have been around 100 basis points. And as we said, most of the liquidation is done. We will see a small portion of it going through in Q3. So we might see a small impact in Q3. And post that, I think it should be the normalized margin.
Got it. Thank you, team, and happy Diwali.
Thanks, Adisha.
Thank you.
The next question is from the line of Aditya Ketan from SMIFS Institutional Equities. Please go ahead.
Yeah, thank you, sir, for the opportunity. Sir, my first question, this impact of 100 bips which you have mentioned, this is on gross or in EBITDA?
It's in the gross margin.
It's in the gross. And also possible to quantify the absolute value of loss?
Actual value of, sorry, come again, if you can repeat your question, please.
If you can quantify the absolute value, which has been impacted during the quarter.
So somewhere close to 5.5 CR.
Okay. Sir, going by the store addition in H1, so we have achieved 35 store addition, and you have guided for 100 stores addition for full fiscal. So that means like for the next 2 quarters, so per quarter we would be adding around 30 to 35 stores. Is this understanding correct?
The math is would lend itself towards that. I do want to give some color as to why we're at 45 stores for the first half. It's primarily because last year we saw a lot of retailers opening a lot of stores, and I think we saw rentals going up a little bit more than we'd like to have seen them go up. And these are long-term deals that we signed. These are 9-10-year leases that we signed. So we felt it was a good time for us to just maybe slow that down till rent started rationalizing a little bit, and we are seeing that. As you've probably read in the news, some of the national retailers have a negative store growth in the previous quarter, indicating that they probably should not have signed some leases, and we decided not to, because we're not about getting to a number necessarily. We want to get to that number, but we want to get to it in the right way.
Okay. So this number is achievable. So 30 to 35 stores per quarter for the next 2 quarters.
Correct. And these stores have a gestation period, right? It's not that we sign something today and something opens tomorrow. We have to have an order book of leases that we have visibility of, LOIs, agreements, and what have you. And we're confident. Listen, there could be a little bit of left or right of 100, but we're going to be within that same zip code.
Okay, got it. Sir, on Walkway, sir, we have not added any store like for the last 6 months. So what is our plan like? So I believe last quarter also you had stated that Walkway you are looking into towards the north and the south segment only. But looking at the demand and all, so why are we not adding any store yet in this segment?
So just so we speak to the same point, we had said the south and the west. Not the north and the west, the north and south as you said, but it's the south and the west, and that's number one. Number two, we have been putting a lot of effort into the Walkway chain to figure out the right business model. And when you do the testings, these testings take anywhere from 3 to 8 months to finish a complete test cycle, and then you have to test it a few times to ensure that you're getting the formulation right. While we do that, we're not in any hurry to open stores on our Walkway chain. I think we are confident that they will be part of the growth story for Metro Brands, so that's not an issue. It's just a question of how and when, and we think the green shoots that we see from Walkway on its business are very, very encouraging.
Okay, so sir, you mean to say so for the next 6 to 8 months we would...
I'm sorry, can you repeat that question? There's some distortion.
Yes, sir. Sir, my question was, so this target store addition, if you have anything on Walkway for FY26 and 27?
Absolutely, they will be part of it. Obviously, since they had a slow start, they won't have their fair share, so to speak. But it will show its growth from here on out towards the end of the year, and probably starting off in Q1 of FY26, we should start seeing some acceleration there. I think don't forget, the rentals went up, right? So that's not the chain you want to grow when rentals are, we're hitting a little bit of a peak bump. So we are definitely haven't taken our eye off the opportunity at Walkway.
Got it. Thank you, sir. I'll join back in the queue.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to answer questions from all participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Sameer Gupta from India Infoline. Please go ahead.
Hi, sir. Good afternoon, and thanks for taking my question. Firstly, on the BIS part, so you have mentioned that the FILA additions on EBOs, you would start from the second half of FY26, and there has been a delay due to the BIS. So just wanted to understand what are the assumptions here. So are you assuming that by then you would start assembling products in India if these BIS regulations don't get sorted out? Or you are assuming that this current situation regarding imports, it will be resolved at some point of time? And by when do you expect this resolution before it starts to affect these plans again?
Yeah, well, I think there's two forms of resolutions that can happen, right? Form number one is if the government decides they want to look at it slightly differently after recognizing the challenges of production in India overnight, right? So that's one way that could happen. The other resolution that could definitely happen and must happen is production actually moving to India, right? And that's not out of the question. That's definitely in the cards for all of the brands that we deal with, including FILA. It's just a matter of we need timing to build up the ecosystem of manufacturing in India, and that takes a little time. So we don't see that as being a long-term problem. We just got to figure out the next few steps, the immediate few steps.
Meanwhile, obviously we have also started evaluating, getting all the raw materials and getting the production done in India. However, it will not solve problems with respect to high price, high heat article, but that is also something that obviously we are working on.
Yeah, and the line that we just launched was predominantly made in India, right? Some of it we got in right before the BIS regulations closes, but the line that we've launched is predominantly made in India. So there are ways to step up to this, and of course we're working on all the different opportunities to do that.
Just to follow up, sir, here, if my understanding is correct, you can still, based on the current regulations, import the, let's say, sub-parts like a sole and an upper and get it assembled in India. Is that understanding correct?
In a simplistic way, you're correct, Samir. So I just leave it at there's a lot of regulations to it. So, but in a simplistic way, you are. But I think the true solution is not about whether you can do something short term. It's about how do we fix the long term, be in line with the regulations long term.
Got it, sir. Last question from me. The store addition guidance of 100 stores for this year, I'm assuming it's on a net basis after accounting for closures. And just to follow up on this, so let's say there is a inherent recovery that is expected in second half. Let's say for whatever reasons it's delayed or it runs below expectations. Do we still go ahead and do our 100 stores, or we also take a little more cautious view and delay it a little bit? How is that going to happen?
Okay, so to answer your first part of the question, it is net that we're talking about. And if we don't see a rebound like everyone's anticipating, we are committed to some of these leases, right? So it's not like you can walk away from them. What it may do is impact the ones that come in the first half of the following fiscal year. But for this year, pretty much what you have is locked and loaded. I mean, short of having an event like COVID or something, there's no reason that we would want to hold back our current growth plans.
In fact, Samir, if we see pessimism in the market and if we see rental softening further from here on, we will be a bit aggressive also.
In opening?
Yeah, in opening of new stores.
Got it, sir. Thanks and all the best. I wish you all a very happy Diwali.
Thank you, Samir.
Thank you.
The next question is from the line of Naveen Niredi from Niredi Investments. Please go ahead.
Hello.
Hi, good afternoon.
Thanks for the opportunity. So I have got two questions. So my first question is, in this year, we are able to see sequential decrease in revenue per square feet. Can you give some color on whether we will be able to get better figures as compared to last year, given that the range of premium customer has increased on year-on-year basis? And my second question is, also you mentioned that there is a supply chain disruption in sports and athleisure footwear segment on account of BIS certification. So how much percentage effect will be seen on the revenue and margin side? That's all.
Okay. So on the square foot part, there's a couple of drivers to the square foot of our base number that you're comparing us to, right? In the base number, Crocs represented a higher percentage of stores than in the current number, right? Because in the last few years, we've really focused on opening Metro, Mochi, and Walkway stores. So that comes at a different metric totally. So while it may look like it's depressed a little bit, it really isn't, because it's just a matter of the mix of growth that we're having. So that's one thing that affects sales per square foot. The other thing is, I don't know if you picked up on it, but we've gone up, our tier 3 penetration has gone up from 15% to 16%. It now represents 10% of our business. So the tier 3 cities don't come on as strong immediately. It takes them a little while to mature and get to the same rate of sales as a square foot of our normal business.
Having said that, Navni, we expect our sales per square foot for H2 to be in line with what we saw last year. I'm not saying for the full year, but individually, if you see it for H2, we are expecting our sales per square feet to be better.
And to answer your question on the supply chain disruption, the kind of business we're talking is under 15% of our total business, and even in that 15%, we would have the ability to produce a lot of that domestically as well, right? We also think that there's going to be a little bit of cost impact on BIS to be BIS compliant. We're not as efficient in operating manufacturing here in India yet. And if you're importing raw materials, because we don't have the ecosystem here in India, there's going to be raw material that you need to import. So there's multiple nodes of touch points on a production chain. That always adds cost. But if we don't see it being significant necessarily, but these are just things we have to consider and work through. But the good news is, for our core brands of Metro, Mochi, Walkway, the BIS effect is minimal. It would only be for expansion brands, which aren't baked into our numbers anyway. They're not. So.
All right. Thank you, and wish you a very happy Diwali in advance.
Thanks, Navni.
Thank you.
The next question is from the line of Umang Mehta from Kotak Securities. Please go ahead.
Yeah. Hi. Thanks for the opportunity. Just continuing this question on BIS impact on SNA footwear. Given that this would have impacted other brands as well, and this 15% would have a lot of third-party brands, do you see them prioritizing their own sales, and are you facing any supply shortages on that account?
Yeah. So when we talk about the impact on the SNA, let's be honest, we're going to see minimal impact right now in the market, because people have forward bought stock, right? When we go forward, the kind of product we're talking about is a high-end product. If I look at that 15% of the product that's not capable of being produced in India by the third-party brands we carry, that percentage is even a fraction of that. So it's not a significant impact. And don't forget, if you cannot get it anywhere in the market, then we're not disadvantaged by it. Will they prioritize their own stores over it? I can't speak for what they will or won't do, but all points of sale are important typically to a brand, and Metro caters to a very unique set of customers, which is why we can coexist in the malls. Same thing works for Crocs. We coexist with Crocs in a Metro store and a Crocs store, and that goes for the other brands that we carry as well.
Understood. Makes sense. And just the second one, just wanted to get a clarification. So since you maintained the guidance of 5 to 15% for the full year, which implies a second half ask rate which is fairly high, and then Kaushal said that you'll maintain the same store revenue per square foot on a YOY basis. Actually, there's a disconnect, right? You need to grow the same store revenue per square foot significantly to achieve your guidance, right? Am I missing something?
Umang, what I mentioned was, if you see H2 on a standalone basis, so H2 versus H2 of last year, then we expect to, our expectation is that our sales per square feet would be around the similar lines as we saw last time in the last H2. And as Nissan mentioned, for the year, we are still maintaining our guidance. We said 12 to 15%. We are hopeful that it should be in that range of, if not 12 to 15, at least 10 to 15% should be the range.
Understood. Actually, because your growth in 1H is 2%, the ask rate is fairly high, right? And we know the store growth you'll be doing. So that was the question. But I understood, got the point. Thank you.
Thanks, Umang.
Thank you. The next question is from the line of Gaurav Jagani from JM Financial. Please go ahead.
Thank you. So my first question is with regards to the margins bit. If you look at the margins, the Q2 was certainly impacted on account of the liquidation of the Fila thing. Was there also an additional marketing spend that was done in the quarter, which also kind of would have impacted the margins? And given that we are expecting, decent revenue acceleration in the second half, so what kind of margin can be expected for FY25 as a whole?
Yes, Gaurav, you're right. Q2 had, marketing cost was higher as compared to last year on account of a new autumn-winter campaign that we just launched. So you're correct on that front, and the impact you see it in other expense, which is slightly higher as compared to Q1 of this financial year. For the year as a whole, for H2, for H1, our EBITDA margin has been around 29%. H2 generally contributes around 53% of the overall annual business. Q3 is the biggest, and it's a quarter where we generally don't see any end of season sale. So we are still gunning for EBITDA margin in that 30% range.
Sure. For the year, that is right?
For the year, yes.
Yeah. Okay. Kaushal, just a question on the regional impacts, if you're seeing anything, because given the data that you share in terms of the Southwest Northeast, a quick analysis of the data shows that South revenue per store has been consistently declining, while we are seeing good acceleration in the eastern part of the stores. So any regional thing or demand patterns you would like to call out?
Gaurav, if you see, and frankly, there's no trend here. Our expansion in East, in terms of overall number of stores, was slightly slower in last 6 months or so, whereas our expansion in West and South has been good in terms of just the absolute number of new stores that we've opened. So that's what is leading to the percentage variance that you see. Having said that, obviously East, since it's least penetrated, just in terms of revenue to store percentage, it is one of our best regions, and that is something that we will be focusing on to increase our penetration from here on.
If you look at the share of business, it's marginally different. I think it's more of a rounding, Gaurav, than it is really a shift in business. There's not even 100 bits. There's 100 bits movement, but it's really a rounding.
Okay. So a related question, to this was, even if you look at the tier-wise data also, I think the tier 3 revenue growth actually has been far better versus, the metro or the tier 1, tier 2. So is that a similar thing, you have been witnessing in Q3 also, or it's just a quarterly or a quarter performance kind of a thing?
What we're seeing in Q3, we have Diwali and Durga Puja and Dussehra. Durga Puja and Dussehra come together, and Diwali, as you know, follows. Both those festival seasons are coming 2 weeks earlier, right? So, of course, we would see the East react very positively to a number like that. When we get to an early Diwali, the North and the middle of the country would react very well to that. And what I meant earlier on when I said that we're starting to be able to predict the business much more accurately, indicating that there's a normalization to our business, that's what I meant. We're able to predict these things much more effectively, whereas in a lumpy business, it's very hard to predict, right? Not saying that I'm perfect at it, but we can tell when we get better at it, and that's what we're talking about.
Got it, Nishan. Thank you, and that's all from me.
Thanks.
The next question is from the line of Shirish Pardeshi from Centrum Broking. Please go ahead.
Hi, good afternoon. Thanks for the opportunity. To start with, Kaushal, will you be able to call out against 5.4% revenue growth, what is the volume growth? And maybe if you can give us, is there any regional variation within Metro Mochi stores?
So on an overall basis, Shirish, we've seen our ASP rise by about 1% in H1. So obviously balance would be the volume growth that you sort of can see from the number. Sorry, I missed your second question, Shirish.
No, I'm saying, is this volume dispersion is higher south and west versus north?
No, so broadly in terms of regions, we are not seeing any specific trends wherein, certain regions are consistently outperforming the other or things like that. As Nissan mentioned, there are regional sensitivities. So obviously, when Durga Puja comes, East performs the best. So those are the type of trends that we are seeing. Nothing suggesting any permanent trend with respect to any specific regions as such.
Okay. No, the reason why I'm asking, we started in the beginning of the year anticipating BIS will create some disruption in the trade and the inventory. So we loaded the inventory. So I was just more curious if the Diwali and Dussehra and festive season has come up about 2 weeks early. Is the channel inventory is under control or will have some impact because we have taken much more time than anticipated to liquidate Fila inventory? So this question is in general, not for Fila.
Well, yeah, I was going to say that's two different buckets that we need to be talking about. Let's talk about the Metro Mochi Walkway core business that generates most of our revenue and profits. We've actually seen inventories decline Q on Q, but nothing significant because we had to still forward buy, right? We don't have any concerns about inventory levels for Q3 and Q4 of this year at all.
Yeah, the reason why I'm asking, Nishan, while visiting Delhi and around Corol Bagh, the Chinese supplies is still dominating there. So even if we say we become positive saying that because of the BIS norm, the imports will come down, but there is enough inventory which is happening. So it should not happen that when the market is really picking up, we either have excess inventory or we will not have the inventory. I understand you would have taken a conscious view on building the inventory.
Well, in all honesty, Shirish, less than 15% of our production comes from outside the country in our normal times, and out of that, it's shared between China and Brazil, right? So I'm surprised about your comment that you saw a huge penetration of Chinese-made goods, unless you were referring to other retailers, which is common in Corol Bagh. And I think that's the other thing too. How does this affect the other retailers that would have a positive impact on Metro because we're able to source products domestically? But the exposure is minimal in the sense that we've forward bought enough or we've swapped the production to India, and or we're going to get certified in certain factories to make products internationally. So it's not like it's become totally void. There's a lot of moving parts to this. What I want you to rest assured is that we are on top of it to ensure that when business comes like it is, we will have what the customer wants in our stores.
Sure. That's really helpful. My second and last question on New Era part of the business, I was more curious. Assume that we have about 800 odd stores, and out of that, even if I say that 30% is sitting into the metro, so I would assume that 200 stores you will put the product in for New Era. So more curious, what kind of range, what kind of SKUs, and is it that metro focus you will do in next 2 quarters?
No. So the New Era, the reason we got New Era is we think it fits very well with the Foot Locker chain, number one, right? And number two, we think it's a market that's huge globally. It's a very well-known brand globally, and therefore bringing it to India is a great idea. We are more optimistic about the channels of e-com and Foot Locker and our own kiosks. And as of now, we don't have any intention of making Metro Mochi stores a big part of that at all.
So if I pick up your thoughts, largely it will be e-commerce led experiment.
Well, I think it's a matter of when you say it, but initially it's going to be e-commerce and Foot Locker and a couple of kiosks. And then, as you know, everything Metro does, we look at what's happening, we measure what makes the most sense, and then, we push the throttle on whatever makes the most sense. But we're confident that the brand will resonate in India. We've already seen some good results out of our first week at the Foot Locker store on New Era.
Sure. Yeah. Thank you and all the best.
Thanks, Shirish.
The next question is from the line of Devanshu Bansal from MK Global. Please go ahead.
Yes, sir. Hi. Thanks for taking my question. Sir, I wanted to better understand the thought process behind Metro going for a celebrity-led marketing campaign, which I guess we have not done before. So could you share some thoughts on this, please?
Sure. We have done celebrity-led advertising and marketing in the past. The last few years, we've gone more of an influencer route of marketing, which is also another very good form of marketing. And I think what's important is that you keep having campaigns that appeal to different segments, yet in the same class of customer you want, because we all consume information differently. Some consume it better if it's a celebrity giving it. Some consume it better if it's a key opinion leader. Some consume it better on print. Some consume it better on digital. So as a marketing thing, you don't want to be all things to all people. You can't afford it. So you have to pick and choose which one you're going to pick for this season, which one you're going to pick for the following season. And I think we've picked 4 outstanding celebrities for Metro.
Understood. And second question, wanted to understand the inventory sort of situation as of now. So over last 12 months, we have added about 75 to 80 odd stores, but working capital encouragingly has actually reduced by about 50 odd crores between September 23 and 24. So I guess such a network expansion should have actually led to an increase in inventory by about 50 odd crores. So overall, it's a 100 crore kind of an optimization that has happened in the business. So first, I wanted to understand what has driven this kind of working capital optimization, and second, further to previous participant question, are we sort of comfortable with this current level of inventory, or do we plan to sort of increase the inventory in the system?
Devanshu, in fact, we had guided that our inventory would go down from here on, and as Nissan touched upon the point that because of BIS implementation, we had front-loaded our inventory buying. So we were high on inventory vis-a-vis our normal levels, and that is what is becoming visible now. We have improved our working capital cycle over last 1 year, and we further expect to optimize it by a bit by end of March this year, in spite of adding new stores. So this is just a factor of inventory front-loaded on account of BIS implementation, which is now getting liquidated, and we will move back to our normal working capital cycle. To answer your second question, I think Nissan answered it in the earlier, with respect to the earlier question. We feel extremely confident with the level of inventory that we have, and we don't anticipate a scenario of either a stock out or stock excess on an overall basis. We should be just fine with our overall inventory level being aligned with the kind of sales traction that we see.
Understood. Lastly, wanted to check on this observation that I had specifically. It may be anecdotal, but EOSS period and discounting sort of seemed to be higher this time around in Q2 versus prior periods. So wanted to check, is this a correct observation? Your thoughts here, please.
I think your observation is correct if you look at the market, but it's not correct for us. We did not have as much inventory that were aged and we felt was distressed to put on sale. So overall, in all 3 brands of Metro, Mochi, and Walkway, we had considerably, and even Crocs, we had considerably less end of season products to take care of. And having said that, though, we had enough to meet the quotas that we had to, right? It wasn't like, we missed some sales on end of season sale. But there were some challenges for us because we did not have as much old season stock. And I think you would have seen that reflect in our gross margins if we hadn't spent some of our monies getting rid of Fila inventory that we needed to discard or sell through.
In fact, Devanshu, just to share a number, our overall end of season sale contribution was sub 9% and in line with what the number was in last year.
Understood. Question very clear. Thank you for taking the question.
Thanks, Devanshu.
The next question is from the line of Tejas Shah from Avendus Spark Institutional Equities. Please go ahead.
Hi team. Thanks for the opportunity. My first question pertains to BIS-led disruption that you spoke about. Now, in past, we've observed in various industries that MNCs often take longer to adapt to such changes compared to local companies. So over here, do we see an opportunity for us to gain a competitive advantage during this period, or is that very ambitious or perhaps not applicable to our industry?
Yeah, so I would say it's not as applicable. To say that there are no opportunities would not be a true statement, but it's not as applicable because it's not like the multinationals were not producing in India. They were producing significant portion of the business in India, right? And don't forget, if I was to compete with them, you would have to compete and pick up on an opportunity. It would have to be with India production. So now all of a sudden we're on a level playing field again, right? I don't have an advantage because I have production, they don't. So where the delta comes, where the difficulty comes is in higher tech product. Now, of course, Metro sells some of those higher tech products, but I don't think it creates an opportunity because if they're struggling to bring in technology-driven products into the country because of BIS, we'll be just as challenged to do that, right? So there's not a distinct advantage. Having said that, I think our dependence on that product is significantly lower than that of those multinational brands, right? So our exposure is significantly less. And so we didn't feel we had to mitigate that risk because it's not as much of a risk for us that we couldn't mitigate. So that's it in a nutshell, Tejas.
Got it. And the second part to the question is that we have seen it in many other industries post-COVID. To give an example, luggage, where 4 years back we could not have envisaged India actually becoming competitive there, but somehow at the scale players are now showing that economies of scale are coming through. Do you see both in terms of quality that you spoke about initially and in terms of pricing, Indian players or brands who have some manufacturing facilities which can be used now? Do you think that we can actually tap those capacities to meet both the ends on quality and on pricing?
So first of all, I do want to say that, the quality of Indian manufacturing is not substandard necessarily. What it is they produce a different type of product totally. That obviously is not as highly technical, that's not as highly complex to produce, and hence comes at a lower price point. But price point to price point, India can produce those goods just equally as well. So it's not like there's an opportunity that's vacant sitting there. The challenge is to build the high-tech manufacturing, and that has two challenges. One is obviously capital, because molds and dyes require a lot of money to be invested. That's number one. And number two is the technical know-how. If you've never done it, you need to import the technical know-how for the first so many months, so many seasons, so you get people trained in India, or you go send your people abroad to get trained. One of those two things has to happen. That takes time. That's where the challenge is, Tejas.
Got it. And last question, Ihsan, you mentioned that October is progressing as expected, and with the rest of second half relying on strong wedding calendar. Last year also, the consumer sector, not only our industry, but the consumer sector at large was similarly optimistic about the wedding season, but somehow it did not come through and it fell short. So just wanted to know what indicators you are monitoring so that we don't fall under the same trap that industry actually fell last year.
Yeah. What we're looking at is the run-up to Diwali and Durga Puja, right? That's coming up very well, number one. Number two, you're right. I think we were quite hopeful, but the year before that, there was a lot of catch-up weddings that happened as well. So the quantum of weddings that got squeezed into those dates, the previous Q3 was significant. So when you look at the growth over a period of time, that quarter actually was right in line with the normal expectations. And like I said at the opening remarks, recovery tends to be lumpy. And I'm not talking recovery from something bad. Really, we're recovering from the COVID bump up. That's going to be a little lumpy. I think you've heard the other retailers say, we had a good September, but July was tough. These are lumpy behaviors of a consumer market that really are driven by comparables rather than demand. We're seeing a little bit more evening out of that, and that's what I referred to.
Great. Very clear. Thanks and all the best, and happy Diwali in advance to the team.
Thanks, Tejas.
Thank you, Tejas.
The next question is from the line of Mansi Desai from Dalal & Broacha. Please go ahead.
Hello, sir. My first question would be, what are our expectations in terms of the store throughput that we would expect from Foot Locker since we've opened the first store? So are there any internal targets that we have that, this a store should be doing this much revenue, etc.?
Yeah. So I don't think we want to share that on a public forum, to be quite honest, Mansi. These are all competitive advantages and secrets that we keep in our trade. What we do want to assure you, though, is that the targets we set ensure two things. One is that the store is profitable in operation, and number two, that number is consequently exciting enough for us to scale the retailer up. So those are the kind of metrics we use and say, okay, if it meets these two numbers, then meet these two initiatives or desires, then we'll start scaling forward. But you can rest assured, given the financial discipline that Metro has, that's going to be the driving force for it.
Okay, and this year you're talking about 4 to 5 stores for Foot Locker, and next year, if we meet our targets that we have, how many stores could we see for Foot Locker in the next year?
Well, so I think Foot Locker, if it hits the expectations that we have, has the potential to be in every big metro city in India, right, to start with. And don't forget, by the time we get that done, India will be at a different place because it'll be a few years from now. So, it's really a question of a rolling incremental number as opposed to a static number, and once you hit that number, that's where it's going to stop. It's going to be an evolutionary number as India evolves, as we evolve our penetration in India as well.
Okay. Sir, and my second question would be with respect to our contribution from more than 3,000 rupees price point has gone up significantly versus last year. Is this because we've opened lesser stores on Walkway, or is it that even in the current Metro and Mochi stores, the lower end, like less than 1,000 or 1,500 rupees products is somewhere where are not picking up?
So that's a good call out, right? So part of it is that, but don't forget, it's offset by the fact that we didn't open as many Crocs stores who does a significant amount of business over the 3,000 range. And when I say didn't open as many, not as many as we've opened in the past. We still open our fair share of Crocs stores. But so that the Walkway effect is offset by the Crocs effect. The reality of it is our ASPs in our Metro Mochi business are growing in the sense the consumer is preferring premium products. And we find that when we have product in the FitFlop range, it sells very well, which is an 8,000 rupee slipper or a chappal, as we might say. So we are seeing the consumer gravitate to the right product at that price point. As I mentioned before, we had a terrific monsoon season with Crocs, and that's a high ASP item too. So these are all indications of a consumer that likes premium products and not a offset of something else.
Okay, sir. Thank you so much. And happy Diwali.
Thanks, Mansi.
The next question is from the line of Saurabh Kundan from Goldman Sachs. Please go ahead.
Hi, thank you. My question is again on BIS. So you must have been in discussion with you or certain bodies must have been in discussion with the regulators or the government on this. Clearly a disruptive situation for all of you. And as you said, that the production in India will eventually happen for these sports brands, but it's going to take time. So what's the possibility that you see that there could be some relaxation from the government's end, even if temporary, to allow imports in case brands have plans to sort of start producing in India?
So I really can't comment on. I have no knowledge of it. What I can tell you is that these brands produce significant numbers of pairs in India for export, not just for India consumption, but for export. And I think if anybody has a chance of getting some kind of acknowledgement of that, it would be them, because they are huge exporters of footwear. So it's not like we've been importing all our life, we want to continue importing a little bit more. They've been importing and exporting, and some of these brands export far more than they import, right? So what the center sees value in that or doesn't see, I can't speak for that. But I'm just giving you the framework that exists. So if you want to put some odds on it and put a betting scheme on it, you can do so.
Sure. My next question is on your, you said that you've launched a new Fila range, which you've got manufactured in India. Did I get that right?
Most of it. Some of it was pre
Okay.
the closure. Yeah.
Okay. Couple of questions on that. What's the price range for the footwear that you've launched, this new range? And secondly, where do you get it manufactured?
So a majority was manufactured in India, right? So that's number one. So we did that right here in India. And rather than say what is the price range, because that may not be indicative of what the true selling prices are, I would say we're selling in the 8,000. Our best is coming around the 8,000 range, right? So that's where we are with it. Though it ranges from 5,000 to 12,000 rupees.
Right. And one last question. If you strip off the Fila sales from the second quarter reported consolidated sales number and from the base also, what is the sales growth that you have? Basically, what's the sales growth in your core business ex Fila?
It wasn't I don't have that number handy, but sorry, we can get it to you at some point. But the reality is it didn't add much because it didn't throw much down to the bottom line either, right? It would not be significant erosion when it comes to the top line on sales.
Right. Thank you. That's all from my end.
Thanks, Saurabh.
The next question is from the line of Saurabh Mondal from RK Advisory. Please go ahead.
So hello, my first question is the purchase of stock in trade, which is if I look at the percentage as a percentage of sales, it is 47%, and in the previous quarter it was 35%, and previous year same quarter it was 37%. So what is the reason for that?
So Saurabh, it's a function of you've seen the decline because obviously we had front loaded the inventory. So obviously new purchase in the current quarter is lower than the kind of sales that we have registered. If you take two lines, purchase of stock in trade and changes in inventories, that is a right way to see. Both this taken together will give you understanding of the total cost of sales and the resultant gross margins.
Okay, that answers the question. And my second question is like with the new BIS norms increasing cost in the market, while big ticket items may not be significantly impacted, the bulk of industry volume comes from rupees 499 to 999 range. If you include the unorganized market as well. So what is your perspective on the effect of the BIS regulation on small manufacturers, and how do you see this impacting Walkway given that it also operates in this price category?
Sorry, there's no impact to that price point. The impact that you have is when you're moving production of a significant nature that you cannot replicate in India from an outside India country. That's when the costs come in, right? Because if you want to do it differently, if you need to set up factories and lines that are specialized for it, all that product you're talking about that's between $499 and $999 is easily available and manufactured in India today. It wasn't the case when people started sourcing it, which is why they've just stuck to their legacy sourcing methods. But that exists in India today. That's not where you'll see any impact.
And sort of, MSME vendors are exempted from BIS. So though some component like soles, etc., would have to pass the BIS test, and there you might see slight increase in the cost. But the overall ecosystem, since MSME vendors are out of BIS purview, it shouldn't have significant impact.
Okay. So I have another question on BIS. I don't know is it right or wrong that the size of the foot, it was we used to manufacture US and UK size. Now they have something, I don't know the name, it's 3-letter, something new for only India. Is it right that, if that is implemented, then I think everybody has to change?
Yeah, so I mean, India has, first of all, to answer your question on that's been under discussion. We don't have any clarity on what's happening with that. But India has some very strict regulations when it comes to labeling anyway that we've all managed with, right? So once we get a clear picture of what that regulation is, we've all put it, I mean, this has some unique regulations in India on what needs to go on the label, and we're able to do that on all our footwear. So that's not an issue. Even if it were to come, it's not a challenge.
Okay, my third question is, Foot Locker carries popular brands such as Puma, Nike, Adidas, New Balance. Does Foot Locker hold exclusive distribution rights for this brand in certain region, or do they offer a unique product line and style that are available exclusively through Foot Locker?
Yep. So to answer your first question, Foot Locker does not have any exclusive distribution agreement in any country that I'm aware of, but I'm not a Foot Locker spokesperson, so that's my caveat to that, number one. Number two, somewhere between 10 to 20% of Foot Locker's range can be exclusive for Foot Locker. They do have some styles, but what's really unique about Foot Locker is not about necessarily the exclusives, but having a store with the entire elevated, curated range. So the consumer has a unique shopping experience, and also the experience with the stripers, which is what we call our employees of the Foot Locker store. That experience is totally unique. So it is the CX of the store also, not just the exclusive product, that makes Foot Locker uniquely different.
Okay, so I want to ask another question. So,
to interrupt, sir, could you please fall back in the question queue for further questions?
Oh, okay. Thank you.
Thank you.
The next question is from the line of Priyank Chedda from Valum Capital. Please go ahead.
Yeah, hi sir. My question is on the sports and athleisure footwear category, which you have mentioned, has seen, particularly you have mentioned that category has seen a supply chain disruption because of the BIS regulations, and we have taken a cautious approach on that. So wanted to, if you can elaborate more, what's exactly going, because this is a category which was growing in double digits and had seen a trend shift after COVID. So what exactly problem on the demand side as well as on the supply side for this category?
So I can't speak to the demand side on this category. Demand will remain consistent, is my best guess. But when you look at the supply side, first of all, they haven't already been disrupted. There could be a disruption if they don't solve for the problem, Priyank, right? So that's number one. It's also, every brand has different levels of manufacturing in India relative to their needs, right? So there are brands that are fulfilling 60, 70% of their needs from India, and there are brands that are fulfilling 10% of their needs. So if you're a brand getting 10% of your products in India, this is going to be a big challenge for you to accelerate the opening of factories in India. If you're a brand that's already at 60, 70, moving to 90 is not going to be much of an issue. So it just depends from brand to brand. I really can't speak as a blanket statement.
So our cautious approach is because we are not 100% or not even cross 60% in terms of manufacturing locally, and that is what the basic strategy of cautious approach is, that right? Is that understanding correct?
Are you talking about our cautious approach on Foot Locker?
No, I'm talking on the sports and athleisure category, where we have mentioned that we have taken a cautious call.
Right. Well, cautious is not stopping. Cautious is just being alert and aware of what's going on and monitoring it closely. We're not walking away from the category by any means, and we don't feel that there's no way we can even survive in that category. Of course, we are going to play in that category. We're just keeping a very alert eye on it to see how we move that forward. Listen, when there's disruption in any industry, you got to be cautious about how you make decisions, as opposed to if you don't predict disruption. No, similar, if you knew there's a war coming, you'd think differently than if there was no war coming, right? So we not that this is a war, but this is disruptive like a war can be, and you just got to be cautious with the decisions you make. You cannot live on the same assumptions that you lived on and got to this point, and that's all we're saying.
Got it. Just a clarification, how much would be our local manufacturing, if you can share it on an overall level, or maybe for sports and athleisure category, that would be helpful. Thank you.
Well, so it depends. So what I can tell you is that less than 15% of the products that we sell in the Metro Mochi are sourced internationally. And I can assure you that we've mitigated that risk.
Thank you. The next question is from the line of Aditya Ketan from SMIFS Institutional Equities. Please go ahead.
Yeah, thank you, sir, for the follow-up. Sir, my question was onto the Foot Locker. Sir, is there any sense like how is the store format, like very large or mid-sized stores? And also possible to quantify what would be the average size per square feet for the stores?
So the stores range, Aditya, from 4,000 square feet to 7,000 square feet typically, right? But as you know, prime real estate in India can be quite challenging to get. So sometimes it is not a matter of what we want. It is a matter of what's available at the right location. And, real estate is all about location, location, location. So, sometimes you're willing to give up size to get the right location. Sometimes you think your size gives you a better location. So it's an art. It's not a science that I can just tell you. But the range of ideal Foot Locker stores should be somewhere between 4,000 and 7,000 square feet.
Okay, okay. So my second question was onto the demand, so which we are witnessing pre-festive season. So just a week left for the Diwali. So how is the footfalls across the stores, and how much conversion ratio are we achieving as of now?
So the footfalls are in line with our expectations of this. The problem you have is when you compare to the Diwali period last year, it was in the middle of November, which means it had also the tailwind or the effect of the marriage. There were full-blown wedding season going on in November. So when you pull back those numbers, you have to be able to delineate between what was Diwali for Diwali last year and what was wedding for wedding last year, and then you pull the Diwali numbers and layer it onto your numbers this year. Listen, retail is a very tricky business. That's why I said being predictive on it is not always easy, but we feel that where Diwali is headed right now is right on track.
Okay. Okay. So just one last question. Sir, is there any volumetric guidance we can give for FY25? Like for FY24, we have achieved almost a 15 million pair. So similar, how much growth are we anticipating for 25 and 26?
Yeah. So, Aditya, if you see historically, we have achieved ASP growth of around 3% plus or minus 1 or 2%, whatever, yeah, right? So I'm just saying hypothetically, if we achieve sales growth of 12%, then volume, if you want to arrive, if we do an ASP of 3, then the volume growth would be around 9%. So, simplistically, that is how it would sort of work.
Thank you. Thank you, sir. Thank you.
Thanks, Aditya. I think we have time for one more question.
The next question is from the line of Bhumika Jain from Desilvadu Advisors. Please go ahead.
Okay. I had to say it. I'm sorry, you're not audible.
Hello, Ms. Bhumika. Your line has been unmuted. Can you please go ahead?
Hello?
Yeah.
Hello, am I audible?
Yes.
Yes, sir. So your total sales in the fourth quarter of FY24 was 583, and in this quarter, total sales is 567 crores. So that there is a decline in the total sales, but there is 40% rise in the credit sales from the March 2024. That can we know the reason for the rise, or how is the company taking this forward or not?
Sorry, Bhumika, not sure if I got your question right, but generally, if you see in our industry, Q2 is the smallest quarter. Q1 generally contributes around 24-25%. Q2 is around 22-23%. Q3 is around 27-28%, and Q4 is around 25-26%. Right? So, logical way to compare sales is not with immediate last quarter, but with last year same quarter. So that's how ideally you would see. And if you see Q2 over last year, we have grown by around 5%.
Okay, sir. Sir, I have a colleague. He also wants to ask you a question. I'm passing you.
I'm sorry, was there a question there?
Yeah. Hi, everyone. This is Mridul from Desvelado Advisory. I just wanted to double-check here since BIS has posed a little bit of a concern amongst all of the analysts here. I just want to look at the flip side here. Are we looking at any incentives from the government since we are going to bring the production to India? Are we looking at any incentives that might help ease the suppression of margins that have been showing up a little bit in the previous quarters by a few basis points or so?
Well, there are PLIs from the government, right? So that's not an issue. It's not like the government is walking away from it with no help and no assistance. But the reality is not a question of ability for India, it's a question of timing. And it's not even a question of capital because there are companies willing to invest that kind of capital. It really is a matter of timing. But, in all honesty, whether that happens or not, we don't see any significant risk to price hikes coming up, number one, and we're not manufacturing, so, we get less affected by all this.
Okay. That's pretty much it from my side on this issue. That's all I wanted to ask.
Okay, thanks. I think we've come to the end.
Thank you. That was the last question for today's conference call. I would now like to hand the conference over to the management for their closing comments.
I just want to thank you all for being on the call with us, and we all feel the growth that we've had Q2 over Q1 will continue in Q3 over Q2 as well. Thank you all.
On behalf of JM Financial, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.